Time now for Futures in Focus. Joining us from the CME today is Phil Streible of RJO Futures. Let's take a quick look at the dollar. Typically quiet before an FOMC decision. These are not typical days, but the dollar is still quiet, Phil. What do you anticipate will happen market action-wise later on?
Well, I mean, we expect the Fed to continue to reiterate that they're going to be patient with this. And really the path of least resistance with like the Treasury market, our Treasuries coming up, interest rates coming down. U.S. data has really weakened recently, especially the housing market and also the jobs market. And I really think that the Fed would have a much different tone if we would see an agreement with China being made. I think that growth would be much more robust, and I think that the Fed would be much more hawkish on this. So as far as the dollar, we do expect it to weaken. In other asset classes like metals and energies, I really think that gold has an opportunity here to start to push back up and hold 1,300. Yeah,
we're above 1,300 right now, 1302.74. I do also want to ask you about oil, because we got quite a surprising round of data this morning, and right now WTI is at 59.34, up 31 cents, so it's off its highs of the session. But we got that massive number earlier. What happened down at the CME?
Well, I mean, we saw quite a bit of action, especially in crude oil. We're starting to see it push back up. $60 is right around the corner, and that's OPEC's target, getting back to $60 to $70. It'll be interesting to see if Trump comes out and tweets something about oil prices to try and push it back lower. So it's been really a two-sided affair between OPEC, Russia, and the U.S.
Right. Now, do you anticipate that we'll see that $60 mark? I mean, you would have thought that a drawdown of 9.5 million barrels last week would do it, if anything, and yet we're back well below it again.
Well, I mean, the key is that we're still holding well above the 5-year average on total oil inventories. We really need to start to, burn up some excess supply there. Also, Venezuela, we've got to continue to monitor that situation down there. And if we get this, U.S.-Mexico-Canada agreement passed through Congress, that could boost also the demand there. So there's a lot of moving parts with oil right now, but I really do think that $65 is probably closer to a year-end target.